Hey, what's going on, everybody? It's Cory Meals with the Meals team at Keller Williams Realty, and I am joined by Michelle Castle with Guild Mortgage. And today we are going to be sharing a little situation, a little experience that our clients have had.
A story.
A story, a story of some clients that we were able to help out and talk a little bit about their situation and how it might relate to several people out there who are watching this. So essentially, right now, what we're seeing all across America is millions of people are taking advantage of historically low interest rates. There are people who are, refinancing. They're wanting to lock in that 30-year fixed loan, and they're doing it at extremely low rates. One thing that Michelle and I want to bring up to everybody's attention is that right now, a lot of people are also missing out on a huge opportunity to, make accommodations to different lifestyle changes that they have. And what I mean by that is right now, a lot of people are finding themselves spending a lot more time at home. They are homeschooling now. Maybe they actually do need that home office. So we're seeing a lot of lifestyle changes for people. And we're going to talk about a specific scenario that one of our clients went through. So Michelle, give us just a little bit of insight on this story and kind of where our clients were at and what their need was.
All right. So thank you. Number one, thank you to you for paying attention, because I know that you're following up on your clients that have purchased homes. If they purchased a home just last year, they're probably paying 4.25%, 4.5% interest rate. Rates are so low, it's still, even though it may have been a short period of time since they purchased a home, it still makes sense in a lot of cases to refinance. So good for you for following up with everybody and letting them know that there's some opportunities out there to save money. And my question is always, what are you going to do when you save money? I mean, if you're saving money monthly and you're saving money over time, and we shorten those notes and you're building some equity in your home that you probably hadn't had the opportunity, you wouldn't have had the opportunity otherwise. But what are you doing with that savings? Because that part is really near and dear to my heart. I like helping people get out of debt and finding ways to save more money. So this has been really fun for me because we've had an opportunity to save people money, help them get out of debt, and put more money in the bank. But this situation was a little bit different. And I know it's a conversation that you've had a lot with your clients because needs have changed. You guys, I know that some of you guys are having to conduct business from a desk in your bedroom, and you've got the animals jumping up on the bed, and you got the kids running through, asking some questions because they're trying to take a test real quick on the other end of the house, and they have a question, you're in the middle of, and you're on a Zoom call. And that's just the way it is. So I know housing needs have totally changed from the way it was just a year ago. So Cory, back in the day, remember you'd have a formal living room, you'd have a formal dining room, and then you'd have your kitchen, and everything was separate. And now houses are built where it's like everything's all in one room.
Right.
And then you have small bedrooms. So needs have totally changed. And I know you're seeing it all the time. So here's the story. And you can tell the client story better than I can because it was your client. But in fact, tell the story. Like, okay, they call for refinance. They want to save some money. What's the story?
Yeah, so I had some clients reach out to me, and they were, of course, like everybody else, they heard that interest rates are extremely low. And their first thought was, well, let's just refinance the house. And they actually reached out to me first. And they asked, if we were to do a refinance, what do you think the house is worth right now? And some different things of that nature. And as we had this conversation and I was just kind of following up, checking in on how everything else is going, that's whenever it came to light that they, their house doesn't accommodate their needs and their lifestyle anymore because it's, it's a little bit, when they bought the house a few years ago, they have had some kids since then. So things have, room is running out, and now everybody's spending a lot more time at home, working from home. They have a need now for a home office and also an extra bedroom. So that is the scenario that we saw. And with the appreciation that we've seen from the time that they bought their house to where they're at now, they've got a ton of equity in their property. And I know a lot of people are in the same situation where just the housing prices here in North Texas and the appreciation and the equity that people have is continuing to increase. And so that was something that, after hearing that, I said, well, have you guys thought about purchasing a new home? Or, if this home isn't meeting your needs, maybe we should talk to Michelle. And this was after we had already done a couple of these total cost analysis to really break down and say, where are you at and what do you really need? What is important to you as a family? And that's really kind of where we are. And so now, they ended up buying a new home that fits their needs. And the cool thing about it is they were able to look at several different scenarios with the total cost analysis and really figure out what's the best course of action for their family. And
I'm going to share that. I'm going to share that real quick so they can see what we're talking about. Number one, a total cost analysis gives us the ability to show you specifically the true cost of the loan, breaking it down, not just by payment and how much it's going to cost out of pocket, but really what does that mean to you from a wealth building standpoint, which is far more important than the monthly payment. Of course, you got to have a monthly payment that you can afford, but you need to look way further than just about that monthly payment. So can I break this down by numbers real quick?
Yeah, absolutely. Go ahead.
This is, man, I love numbers. So this is, I love stories and I love numbers. So those are it. So in this case, their payment on their mortgage loan was $1,400 a month. They had a 4.5% interest rate and they owed $148,000 on their house. But guess what? Their house is now worth $225,000. But this is that hot price range where values, I don't know, what's the average appreciation for houses in this price range? It's pretty good.
Yeah. Mm-hmm.
Without pulling the stats out, and I just put him on pull that one out for us, Cory. But so the values have and that's what makes it so crazy this right now with this market is values are going up so quickly and rates are down. Typically that is not the case. So it's given people an opportunity to take advantage of some opportunities that just weren't there before. But in this case, all right, so they had a payment of $1,400 a month. They needed to buy a home, or Cory gave them the idea that, hey, sell your house and buy a new home, get exactly what you're looking for and what your family needs. There are a lot of folks that I know are putting that off because they're waiting till they can afford it. But with these rates as low as they are, they can afford it a lot easier than they thought they could. So in this case, they were able to, because they were able to afford 2 payments for a short period of time. And don't be too fearful of that, because remember, when you're buying a house, you get a whole month off, and houses in this price range. I mean, Cory will tell you, a house in the right location, priced right, and in the right condition, selling pretty quickly right now, right?
Yeah. And Michelle, for this, and one thing I want to clarify for this one, that you already kind of mentioned, that they did qualify to carry both payments. And it made them a little bit more competitive whenever going to make an offer, because like you said, it's very competitive in this price range, and a contingent offer just doesn't get looked at the same as, a non-contingent. So they were able to put the 5% down and go ahead and purchase that property while carrying both. So I did want to clarify that for people watching this.
So it makes it a little bit tough for a month or two, maybe, and it's possible the house gets sold before you even have to worry about that second payment. But they do have to qualify. You would have to qualify for 2 payments at the time. But look at this. So they get into the new home and they have their home sold, where they can put an additional $50,000 down towards their new mortgage. And now their payment is $1,800 a month, only $400 more than what it was in their existing home. And now they have a $300,000 house, instead of just refinancing, staying crammed into the home that they currently have with the $1,400 a month house payment. Instead of refinancing it and lowering it by $165, instead, for under $400 a month, they're able to get a house that fits their family's needs. But that's not the cool part. Look at the cool part. So they went from, if they were in that home, if they had kept that home and just refinanced it, their net worth in 15 years based on the equity in their home and just average appreciation, not even the appreciation that we're seeing right now, just an average appreciation, they'd be at 445 if they had refinanced. But instead, they went ahead and bought the house, appreciate over time, and with that exceptionally low interest rate, their net worth then increased to $576,000. That's the cool part. That's where you get to really use your home to build wealth. So doing these TCAs are so fun. Just tell us your story and what it is that you're wanting to accomplish, and let us put these numbers together and see if we can't make your story look something like this, or whatever you want your story to look like. We're able to do that.
Yeah. And Michelle, you know, I've had some clients that I've talked to about this, and this is just a specific scenario where they did end up, you know, selling their house and buying a new one. I mean, I've sent people your way who have ended up refinancing. So I don't want people to watch this and think that that's the only thing that makes sense, is that you have to sell your house and buy it. You know, it may make sense to go ahead and do that refinance. Maybe it's a cash out refinance, but the point I want to make is that everybody's financial situation is unique. And if you would like us to look at something that is unique and specific to your financial needs and your real estate needs and your home's value, then we're more than happy to do that. And all you have to do is just reach out to either Michelle or myself here on Facebook. You can send us a private message, and we would be more than happy to help out with that. Absolutely.
Absolutely. Yep. Just for the sake of time, we'll wrap it up, but thank you for letting me share those numbers. And
yeah, absolutely. Great. And thanks for always taking great care of our clients. Everybody that we send your way is always excited to work with you and very happy with the service you provide. So thank you so much.
Thank you.
We really appreciate that.
Y'all have a wonderful evening. And like Cory said, message us if you have any questions or want to look at a TCA for yourself. Bye.